When most people hear the word millionaire, they imagine entrepreneurs, CEOs, tech founders, people who built billion-dollar companies, people who took massive risks, people who got lucky. But what if I told you millions of millionaires were created in a much less exciting way? No viral startup, no lottery ticket, no overnight success. Just one simple investment strategy repeated for decades. And at the center of that strategy is something called the S&P 500, a boring investment that has quietly created more wealth than almost anything else in modern history. The S&P 500 isn't a company, it's an index, a collection of 500 of the largest publicly traded companies in the United States. Companies like Apple, Microsoft, Amazon, Nvidia, Google, and hundreds of others. When you invest in an S&P 500 index fund, you're not betting on one company. You're buying a small piece of America's biggest businesses. Instead of trying to predict which company will win, you're investing in all of them. And that simple difference changes everything. Most people think investing is about picking stocks, finding the next Tesla, the next Amazon, the next big winner. But history tells a different story. The vast majority of investors who try to beat the market fail. Even many professional fund managers struggle to outperform the S&P 500 consistently over long periods. Think about that. People with teams of analysts, advanced research tools, and decades of experience still struggle to beat a simple index fund. Yet millions of ordinary investors spend their time trying to do exactly that. The reason the S&P 500 works is surprisingly simple. America's largest companies are constantly evolving. Weak companies eventually leave the index. Stronger companies replace them. The index adapts automatically, decade after decade, as industries change, as technology evolves, as the economy grows. The S&P 500 keeps moving forward. You're not investing in one business. You're investing in the continued growth of American innovation itself. And historically, that has been a very powerful bet. But the real secret isn't the index. The real secret is time. Because wealth isn't usually created through massive returns. It's created through compounding. Compounding is what happens when your money starts earning money, and then that money starts earning money too. Year after year, decade after decade. The effect seems small at first, almost invisible, but eventually it becomes extraordinary. Imagine two people. The first person starts investing at age 25. The second person waits until age 35. Both invest the same amount every month. Both earn similar returns. Yet the first person can end up with dramatically more wealth, not because they invested more, but because they gave compounding more time to work. That's the lesson most people miss. Investing isn't about getting rich quickly. It's about getting rich slowly, and then suddenly. The problem is that slow wealth building doesn't attract attention. Nobody posts viral videos about earning 8% or 10% per year. Nobody brags about patiently investing for 30 years. People want excitement, fast gains, hot stocks, crypto trends, market predictions. But excitement and wealth often move in opposite directions. The more exciting an investment feels, the more dangerous it usually becomes. Meanwhile, the S&P 500 keeps doing what it has always done, quietly compounding, quietly creating wealth, quietly turning disciplined investors into millionaires. This is why many wealthy people focus less on timing the market and more on time in the market. Because nobody consistently predicts what the market will do next month or next year. Even experts get it wrong. But over long periods, the market has historically rewarded patience. The people who succeed aren't usually the smartest. They're often the most consistent. They invest when the economy is strong. They invest when the economy is weak. They invest during bull markets. They invest during crashes. And they keep going. Because they understand that consistency beats prediction. Now, does this mean investing in the S&P 500 guarantees you'll become a millionaire? No, nothing in investing is guaranteed. Markets go up, markets go down. There are periods of uncertainty. Risk is always present. But history has shown something important. The combination of regular investing, a long time horizon, and broad diversification has been one of the most reliable wealth-building strategies available to ordinary people. And unlike many financial strategies, it doesn't require special knowledge. You don't need to predict the next big stock. You don't need insider information. You don't need perfect timing. You simply need patience, discipline, and consistency. The truth is, most people will spend years searching for shortcuts, the perfect stock, the perfect business idea, the perfect opportunity. Meanwhile, some of the wealthiest investors quietly follow a much simpler path. They buy productive assets, they stay invested, and they let time do the heavy lifting. Because becoming a millionaire isn't always about doing something extraordinary. Sometimes it's about avoiding mistakes, ignoring noise, and trusting a system that has worked for generations. So, how does the S&P 500 create millionaires? Not through luck, not through hype, and not through overnight success. It creates millionaires through something much less exciting: consistency, patience, and the incredible power of compounding. Because while most people are looking for the next big opportunity, the real opportunity may have been sitting in front of them the entire time, quietly growing, year after year, waiting for those willing to think long term.